How you doing, guys? Hey, Rich, Joe, how you doing? Get that out of the way. Hi, Ross. Okay, so first half an hour. Yeah, not bad. Tooth out yesterday, so a little bit sore still. Um, so stopped Predator for the first half an hour. Then we're going to do some work with the manager and stuff. Uh, Tooth Fairy stopped coming a long time ago. Um, so not a lot of stocks trading just recently because we've seen this sort of pullback during November, which is fine, but it then sort of presents more opportunities after we've had some profit taking. Now, catalyst for that profit taking was most likely the big sort of China tariffs type affair, plus other sort of macro type data and everything. But it's just a normal process that we have that profit taking. The idea is though that we have the opportunity to keep an eye on this pullback and see what stocks are sort of coming to fruition. So and on the stocks predator, the Elliott wave scanner is a very valuable tool in this situation because we can go bullish like for a couple of years, and then we'll get these pullbacks if we can measure those pullbacks. And we understand it's a wave four and it meets majority of the rules, and this could be a good potential trade coming up here, or an opportunity to add some more to our portfolio. Whatever that scenario is, we need to be able to measure that pullback that's happened now and look for those opportunities because stock swing trading or investing, it's like waiting for a bus. You can wait for it for a long time and then they all come at once. So it's just being ready and being patient and taking those opportunities. So the Elliott wave scanner, basically on the end of day scanner, top left here, hopefully you can see my screen. With the Elliott wave 4, we're first going to look for bullish trades. So it's pullback, and then we're looking for that continuation in that trend. And then I'm going to look for anything sort of under 10. And then just to make sure I've got liquid type stocks, I'm going to make sure they're optionable. So I've put that filter on. And then I want a beta above 1. Okay, so beta above 1 means it's outperforming the S&P, basically. Yeah. So we have 34. So we filtered from 5,105 stocks, look for those Elliott wave pullbacks. And then obviously we've done a little bit more filtering with the ones that are optionable. And then a beta above 1 is always for me. So NVDA is the one I've picked out because it's not straightforward, but it's a good opportunity to do a bit of work on the chart. Okay. So NVDA is the one I'm looking at. So for now. So the first thing I want to do is we can understand that April 2025, we've had this big bullish move. It had the wave 3, it's pulled back on a wave 4. Looks pretty good. But the first thing I need to do is, regardless of what it's saying on the daily chart, I just need to go and sort of identify some major support and resistance zones on the weekly, just to make sure that we're not going to go into danger going too early or anything like that, and see where the support has been. So I'm just going to draw a couple of rectangles so we can see basically here we've got head and shoulders forming here. So we got this on this weekly, we had quite a few weeks trying to push through this 184.67 sort of, and we just recently tried to push through there again, and we can see this bit low pivot here as well. So for me, this sort of zone here is very relevant. Okay, this is where we need to be ensuring that we're not going long too early. We need to, could be, we've seen on this big move up from April this year that we had a pullback. It did push in, then it came back to test the support, and now we've gone up again, and now we've come back down. It's pushed through, and now can it push back up again? It's a danger zone. Also, I'd like to see this pivot and this pivot joined as well, because that just shows us we've got a really sort of strong zone there. Let me just take that off. I'll talk about that in a minute. So in reality, this is where we are on the weekly. We got this. Let me just go big, go big, go big. This candle here rejected the lows. Okay. I just want to put the manager on there a second. Okay. No, we're still lower than average volume. Okay. But it's a good pivot. Pivot here, and then the top of that pivot is there. Okay. Now, it doesn't look like there's a lot of room to maneuver. Remember, this is the weekly chart. We're actually just identifying the operational landscape for this particular stock. And this is where we are right now. Is there an Elliott wave on the weekly? We did have a nice move back, and then we've pushed and hit that fifth wave target zone. We've pulled back down, test that previous support. And again, if you want to go really anal with this, we can see that actually that was a really good strong support there as well. This pivot at the top, this pivot at the bottom, this wave 4 pivot is in there. In the future, that $90 price is important if we break down below this sort of level. Okay, so that's the operational landscape as far as I'm concerned on the weekly. We're going to go back to daily now. You'll see the wave 4's disappeared purely because the software needs more data to crunch the numbers. So we just scrunch in and there it goes. Okay. Scrunching is a very technical term, I'll have you know. Okay, so we can see on the weekly all of this movement up and down and testing from down below. So these are good zones, if you like, really, really strong. The next thing for me is I just want to concentrate on this wave 4 now. One of the things I always use is a regression trend channel. So this, if we go to the highest point on the wave 3 pivot, lowest point on the wave 4, and we can see this regression trend channel here is put in. The most important thing for me is this figure here, 0.916 something or something something. That is Pearson's R. Don't get too involved in what it means and how it measures it, but basically we're looking at that price action during that pullback. And now Pearson's R over 90%, 0.9, is a very good Pearson's R number. So basically we can say that this profit taking pullback was orderly. It doesn't look orderly, but it was. Okay. It's pulled back and it's found support at this weekly zone. It's in the green pullback zone, so there's an 85% probability it's going to go on and hit this fifth wave target zone around $225. We just slightly broke the oscillator measurement here. That's one thing that's going against us, so we need to be conservative with an entry. We can see a strong bullish trend with a false breakout stochastic up here. It's just crossed in the oversold zone as well. So there's a lot going for this. I'd ideally like a roller coaster to give me a signal, but we're not got that yet. We're not going to get confluence after a big pullback like that straight away. So now we had yesterday's candle, which was a spinning top doji. So basically we had indecision up at those highs at the top of this zones. That's pretty good. Okay. One thing I do want to put in there is this pivot here and this pivot here on the daily, because this is important for me on the daily time frame. Okay. I'm going to put that in gray. It's not a big zone, but it's relevant right now for me. Okay. So it's not going to stop me from getting some NVIDIA. Okay. But what it's going to do is if I'm swing trading this, once it starts to approach this sort of zone of price, is I'm going to be very aggressive with my stop and make sure that I'm risk free. And that's, excuse me, we can see there was a massive gap up on this particular day, and then it just sold off. Okay, most likely earnings. But it did find support at this weekly zone again, and it is poised to push up. We just need to be aware that this has happened a couple of times at this sort of zone of price, so we just need to be conscious of that. Now, as far as entry is concerned, I think I need to be above yesterday's high. So I need to be something like 186.37 stock market order. I'm going to turn that to green hash. Let me just have a quick look on what we're doing pre-market. 183.69, so it is gapping up. Okay. Stop loss needs to be below the wave 4 pivot. Okay. Let's just put it down here around about there. I'm going to turn that to red for danger. Okay. Now I need to measure my risk to reward to this fifth wave target zone. I need a minimum of 1 to 1.6. So I'm going to use the fib-based extension. I'm going to click on the stop, the entry, and I'm going to move that along there. Let's just clean that up a little bit and take some of these lower ones off. I'll leave that one on and take these ones off. Okay. So we are 1 to 2-ish into there. So we've got a decent amount of risk to reward. We understand that if it doesn't plow through this 196, we need to be making it risk-free. Another thing, an option for this really, and it doesn't matter, this is NVIDIA, it could be a stock, it could be an hourly chart on a futures or a forex or whatever. But the way you're going to look at this is, if we do enter, and it is gapping up today, so there's a possibility it could break yesterday's high and get us into this trade. Once we start to get up there, instead of making it risk-free, you could always hide below there and just reduce the risk for a swing trade. Okay, there's that opportunity if we get the price action up here, because the likelihood is we're going to get there's two scenarios here. We plow through, we come back down to test this as support, so we get like an ABC correction during that fifth wave, and then it goes. Okay, that's one scenario. We can't look right. All we can do is understand behavior, and that's probably a sensible sort of behavior that could happen. Or if this is too much, we could come back and test this sort of zone again before it plows through and does the same sort of thing. Okay, so there's two potential scenarios that's going to happen there. So we just need to be wary that we're going to manage the risk when we approach that zone of price. Let's take these off just to clean the chart up a little bit. So for those that are long-term investors in NVIDIA, this is a good opportunity to add to your position, because we've had an orderly profit-taking pullback. We just want to make sure we break yesterday's high, get above that 186.62 sort of level, and then add some more to that potential trade or investment, because with a potential target of $225, that's a nice bit of return. And if, depending on where your average price is, this is not a bad sort of stage for NVIDIA to actually get some more for that longer term hold. Has anybody, out of interest, has anybody got a hold long term NVIDIA? I do. Yeah. So again, pushing through here, Richard, around, through that 186, just to make sure we're over the start line. Okay, with trading, it's not about catching a falling knife, or with investing, it's not about catching a falling knife. It's about understanding the behavior of that profit-taking pullback. It's about understanding it's found support. It's found support at a confluence zone. So it's not just those fib retracement zones for those pullback zones. It's a big weekly zone of support. It's found that. Wave fours behave pretty normally. We've got a Pearson's R above 0.9. So, there's a lot going for this, that behavior is there. My initial stop would be below, if I was swing trading this, initial stop would be around 169.33, just below this wave 4 pivot. That low is 169.55, so 168.55, something like that. That down at this point here. Yeah, below the wave 4 pivot. If you were swing trading it, obviously, if you're investing, it's a little bit different purely because you're looking to average in on sensible pullbacks to add more and add more and add more. So that's that opportunity there. But yeah, for me, I always, even if I'm just adding to an investment, I'm adding more shares. I'd still put the stop in, the entry, and work out that risk to reward to the fifth wave target zone because it's very important to understand there's enough room for it to go. Okay. And this type of affair where you get the two came back to test this weekly zone down here. You get a big wave 3, wave 4, go. Okay. That's normal behavior, that's trend behavior. Elliott wave just measures it. And the good thing about the stocks predator is literally you can scan for them. Okay. Let's have a quick scan through if there's any others that sort of is any ETFs. Any ETFs? No, that's a shame. Let's start at the bottom. Okay, just need to zoom out here. This looks like it's way too deep, actually. Okay, it is very deep. The thing that puts me off here is we're on the false breakout stochastic, guys. We've got false breakout at the bottom, so this is going to break. This actually could be a trend failure. For me here, let's just put the roller coaster on here. Yeah, we've been in a downward trend. We actually had a reasonably good confluence trade down short. If in my book, I talk about shorting to feed the investing pot. If this is a sort of stock that is good for shorting, for me, I'd be looking to short at 767.56. This is optionable as well, so it might be a good options trade here. Because if it breaks this previous wave 4 pivot and breaks out of this zone, there's every opportunity it's going to come back. The trend, the upward trend, the bullish trend has failed. So let's just have a look at this on the weekly. Don't be afraid to short, just be wary, okay? Just to ensure that you understand what you're doing. So I've got on the weekly, we've got a big zone here. I want to make sure I've got enough room to trade into. So let's change that to weekly is always purple for me. Okay. So I'm picking up this previous wave 3 pivot here, wave 4 pull back on the weekly and a nice move. And then we've come to test, got a lot of clustering. So this is a reasonably good support and resistance zone there. I've got another one sort of down here. We're looking for confluence of three or more pivots really. And then have we got a channel that we could really identify? So let's just put a parallel channel on here. Okay. We're already broken out of it really. That's wide, but that's fine, actually. That's fine. So when you're putting in a channel, we're looking at points on the top here, 1, 2, 3. We're looking at center line. I've only got one touch on the center line. I need this a little better. And the problem is it's not perfect, but we've got confluence of this channel and this sort of weekly zone here and the same here. So this is where we are. We can't make it fit what we want it to fit. This is where we are. Okay. Now, with a daily time frame, we can see going short too soon is going to be an issue. Okay. So in reality, we want to make sure it's broken the upward trend, but below this point here. So I would short it if it breaks down below 725, look for an options play and look with a target of 525 within that again. So this is just an option. It's, you don't dismiss things. Tandem, let's have a look at that. Can you ride tandem? I think this is going to be a very shallow wave 4. No, yeah, that's no good. So wave 4 for me has to have at least 7 candles, 7 days. Yeah, if it's too shallow, not interested. Let's go through a couple more. Oof, blimey, that had a massive gap up here with earnings. Let's just turn the roller coaster off. Okay, I'm going to measure the oscillator. Just to remind people how to do it. We can use a fib retracement, the highest point on wave 3. Sorry, you do the 0 point, highest point on wave 3. And then all I'm interested in is 0.9, 1.4. All the rest can go. And we can see that falls into that category really simply. Let's go to the weekly. Wave 4 on the weekly. It's not brilliant, but there we go. That was a massive gap up for this one. Really, really strong. We can see actually the gap. This gap on the weekly was filled, and then it's moving back up again. For me, so that the wave 4 pivot and that gap there is where I need to be. So let's just talk about this. We had this candle, it closed and it gapped to there. Okay. We filled the gap here. We've got a wave 4 pivot into the green zone. That's the bottom of that candle there. So that forms a zone. This pivot bounced off, this pivot rejected. Good weekly zone. Let's go back to the daily. This is a very complex wave 4. Okay, so there's no Pearsons R there whatsoever. We just need to now figure out how we would trade this. So not every wave 4 pullback is nice and orderly. Okay, sometimes we have an ABC correction. So let's just look at that, mark that out for you. So we go white, go big and thick. Okay, so ABC correction, this one. Okay, now it's not the end of the world, but we need to understand we need an entry, we need a start line. Okay, so when we had this gap at this point and then it rejected and then came back down again, see the low here? Let's connect the dots with that and this high here, just there. Okay, this is a daily zone, so it's gray, not purple. Okay, so we can see here we gapped, we came down, we rejected, it went back up again. It came down. We just probably need to go slightly fatter on this down to here. Hit, came down, bounced off, came down, and this is where we are. So this is we want to make sure if we're going to enter this one where we're not going into danger. So our start line, if you like, is 76.33. Our stop loss is just below the wave 4 pivot. Okay, this is not one I prepared earlier. I've just put it in. If the risk reward is not good enough for me, I'll walk away. Risk reward, fib extension. So we're going to go on to the stop, the entry, just 1 to 1.6 to the top end of the 5th wave target zone. That is close. I think an entry above there is very sensible. We just need to be aware of this $80 point where this B pivot was. So when we get to there, what do? Make it risk-free. If it's going to push, it's going to push through, it's going to go. If it's not, and it's going to mess around and come back down again, not interested. We're going to be out for risk-free on a swing trade here. So again, not every single, no chart looks the same. It's about understanding that behavior, putting the operational landscape in, and see if you've got enough fresh air to trade into. Let's have a look at a couple more. Um, any any of these catch your eye? DD. Let's have a look at that. Ooh, we're late. We're late. And that wave four, look at the oscillator there, didn't really pull back, and the stochastic, no good. Walk away. No, too late on that one. So let's just actually go less than five. There we go. Um, so we've got some that aren't too late. It's too early. NSC. Nope. Look at that. That's a nice move. See, look how complex this was here, but then when it went, it really went. And look at that fifth wave target zone hitting and then coming back down again. All these calculations, all these algorithms, this comes from bloody 30 years of experience from me, and these are very sticky. Light. Oh no, that's a horrible looking chart. Not even interested. Nope. BRKR. I think Nvidia and that other one was probably the way to go. Yeah, this is one where we are looking like we're going to fail here. So what I'm going to do now is I'm going to take all of those filters off. I'm going to look for some confluence. 3 green, optionable, beta above 1. Ooh, not many. Let's have a look. Let's put the roller coaster back on. Okay. Oh, and the roller coaster next. Okay. 4 star, that could be early, but we've got it's not a great deal of fresh air. That risk to reward is 1 to 1. Again, it doesn't take a rocket scientist to say that's the resistance on the daily. That's the support here. Okay. Entry here, and then stop here. I mean, I'm doing it, but I can see it. It's only one, it's not even 1 to 1. Um, okay, so when you see that, once you get used to doing it, you can see if there's any fresh air or not. JBL, very scrappy that one. Not interested. Lending Club. Not like on the weekly. Wow, there's a long way to go up there, isn't there? A hell of a long way. So again, I'm just putting my operational scatter landscape on here. This bottom pivot's very relevant. We can see that it touches and tests here. We get a test here, and then we're just in there right now. That's very, very relevant, I think. Okay, let's go to daily. Okay, so we got a crap ton of room up there, but it's got to clear this pivot. Okay, so I just put this on the watch list to clear $20. The Lending Club Corporation. Okay, if we can clear $20, close above $20, our risk to reward is a long way. Okay. There you go, 1 to 6, thought it would be. Okay, so there's a lot going off there. That's a confluence. So we've had a roller coaster, 6 star buy, all 6 timeframes green on the bias tech feedback. We have got some issues here, so I'd want to close above 20. Why do I want to close above? Why do I want to just go and just go? Because we've had a rejection here before. It's tried to get out, okay? It tried a few times to get through. We had a gap, most likely earnings. It failed. It came back down again. We've got this higher support compared to this one, okay? Let's draw those in a minute. Because so this is a daily support here. Look at this recent support, it's higher. Okay, so the bias is bullish. We just need to make sure we clear danger. So, a close above 20 still gives us a $50 target. Okay, really, really strong. And it's optionable as well for those options traders. So this goes on the watch list. Let me just put that to my main watch list. Purely because yeah, I would. I'd wait for a candle to close above 20. Look at the average daily candles, okay? Let's just look at these. They're not massive, okay? If we take one of the biggest bullish candles, this one here, and go high, low, let's move that out of the way. Let's change it to yellow. Okay, so this is the height of one of the biggest bullish candles we've had this year. Okay, if it comes there, even if it comes today, it's not going to go there. Even if we get an open and a close, if we get the open just before and it closes around 21, there's still a hell of a long way to go to the upside. Okay, once it clears the mess, then we can start to think. So a close above 20 is for me. Yeah. Where are we? Were we going up or down? Can't remember. I think we're going down. I'm going to do one or two more and then go to the manager. Yeah, patience is very with stock. You remember your wealth building with stocks, and you got to think that over a year you might go in 13 positions max. Okay, you just got to find the right ones, and the stocks predator allows you to do that. Really, again, you got full confluence, but look, we've got a previous fifth wave target zone that was hit there. Not interested. Tesla, interesting. Go to weekly. There's nothing to the upside for me here because we are very close. Okay, that's where we are. We'll go back to daily. No, there's no Tesla trade for me. So remember we just it took it away. We had a wave four pullback here and it failed, but it just recalculated. But that was the opportunity to go short at that point. With Tesla, it could go sideways along in here for quite a while. It will need a catalyst. It will need Elon Musk to be caught with his pants down or something like that. It will need something to either break it up or down, and we just don't want to get involved in something that could go sideways. One more, and then we'll move on. Ooh, that's interesting. We have a wave four pullback and a full confluence trade. This is interesting. Let's measure the fib retracement on that. Highest point of the way through. Oh, that just meets. False breakout stochastic crossed over in the oversold zone. We've had a wave four pullback. Wow. Okay, let's go daily as weekly as second, see where my zones are. Okay. top pivot, bottom pivot, and then the wave 4 on the weeklies there as well. We really haven't. We've got a bit of resistance up there, but it's just a wave 3 pivot. There isn't any. There's no. We're looking for 2 or 3 pivots. There's nothing there. I'm not going to put it on. Whoops. Probably a bit late, but there's no risk towards the 5th wave target zone. It's a shame I wasn't looking at this earlier. This probably would have been a great 5th wave move. There's no opportunity now. Pearson's R's probably right on the cusp. 93, that's good as well. Yeah. Stop entry. Yeah, we're only 1-to-1 where it is now. It doesn't meet my criteria. I think a little bit late into this one, but just goes to show you when the stars align, you get a Elliott wave 4 pullback. Oscillator's good, stochastic's good. We're all good to go on there. Is it worth a chance at 1-to-1? If that's your risk and you're trading options with a 220 strike price, for example, into the 5th wave target zone, and there's a good opportunity there that that could be a reasonably good sort of options trade. It is optionable because I've got that filter on. Short interest is very low. There's a lot going for it actually. If for an options trade, I wouldn't swing trade this and buy physical stock. But if it was an options trade with a strike price of around 220, I think I'd probably, if I was an options trader, I would probably look at that. That looks pretty good. Any questions on the stocks Predator before I move on? Did 35 minutes. Sorry, guys. I'm supposed to do 30. You got to remember, stocks is where I cut my teeth all those years ago. Okay. Right. Let's move that out of the way. Now we're going to talk about the manager. Okay. I had a good question yesterday in the Discord group about manager, and I just needed to just to remind people of the what the colors mean, the dots, and all that sort of stuff. So I just wanted to give an example. Silver futures, for example, very tradable. Just randomly opened a chart upon futures. So I just wanted to go through behavior, really. So one of the things for me is it's obviously the time of the day when you're trading things as well. So this, depending on where you are, whether things are tradable or not, you'll get to know the instruments you can trade. So at this moment in time, I just want to go through this big move. I want to talk about the manager join the move. I'm going to talk about also things, this is a VWAP Predator. It's on the 10-minute time frame, pretty standard time frame for trading commodities. One of the things I always look at is an overnight high or low, or previous day's high or low in this sort of situation. So even though we are getting signals down here and a signal here, we need to be aware, we need to look left during this period of time where that high was. So no matter what type of strategy you're trading, you need a start line. It doesn't, now we've gone from stocks to silver futures, but it's still the same thing. We need to be clear of trouble. Now, with a VWAP Predator, remember, this is a momentum indicator, so it is indicating that there's bullish momentum forming, and it most likely will break through, but wait for it to do that, okay? Don't get sucked in to like this move and then it's coming back down again, and it could happen again. You can't look right. All you can do is make a decision, okay? So we're coming into the US morning. This was overnight. We've got a buy signal here. All 6 time frames are green, okay? There's nothing really up above. our entry is very simple. You just literally go there above all of the noise. Yeah. Above all of the noise, where would our stop be? Okay, stop sensibly. We see this move up, we go sideways, and we go again. With a VWAP predator, however, sometimes we'd like to go 2 extensions back, to this time to the VWAP, and that's our stop. And that can be a dynamic stop as well. So if I just put that in here, so we've got lots of risk to reward. There's nothing up above from the previous days. Everything's good. Stop is here. Entries here. All 6 time frames are green, and it takes us in. Okay. One thing now that a conservative type of entry strategy would be just to follow the VWAP as you're going through and place a stop there. That's a very conservative strategy. That's one type of trade management that you can do without a manager. The next one would be a more aggressive. Once we start closing outside this VWAP extension, this final one, is to follow this here. Okay. So at this point here, blah, 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 all the way up to the close to that point there. Okay. That's a more conservative strategy. Now, let's put that back down there. The manager is, it looks at volume from candle to candle, but also looks at average volume as well. So let's remind ourselves, a green candle is an up candle, a grey candle is an up candle, but a green candle is what we call accumulation candle. So it has more volume than the previous candle, the time frame. In this case, it's a 10-minute period of time. So when we see the buy signal on the VWAP, that's also green, okay, but it's colored blue because of the VWAP. And then we get grey, green, grey, 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 grey. And then when we pull back, we see these little cyan. So this is cyan and red is down, but cyan has less volume. So we can see here, it doesn't really want to push down, and we can see this green building again. So we get accumulation candles coming all the way through. Keep going, keep going, keep going, keep going. This point here is my first point where I start to understand that this is running out of juice. Why? So let's talk about this. This candle is green, so it's got more volume traded than the previous 10-minute period. The following candle is green, so it's got even more volume. Then the next candle is green, so it's got even more volume than that previous one. Now we get an indecision doji, which is red, which has actually got more volume than this green candle, okay? Otherwise, it would be cyan. It has higher than average volume. We are total indecision. For me, that is the time to get out, okay? It may push up a little bit further, but you can see it tries here. It retraces 50% and then just runs out of juice, okay? And you're not going to carry it over anyway. So aggressive type of trade management is with understanding how the manager works. And from candle to candle, very, very important. Remember, this is a big move, okay? And you've got to be aggressive. So one of your sort of semi-aggressive moves is you're making a decision on every single candle with a manager is just to move that up here as it goes, yeah? So you're still locking in profit. At that point, you're locking in around about, I don't know, 357 ticks. I mean, this is a big move. Now, when you get this indecision, that's the time to get out. Okay, this makes a massive difference from 357 ticks to 500 ticks. Okay, huge. But that behavior will be obvious. Okay, we'll look at you see it just runs out of juice here. See this indecision doji higher than average volume, tries to push up, fails, and comes all the way down again. Yeah. So you've got to take note once it goes. Now, one more thing with the VWAP predator before we go and look at a different indicator. So once you're in on this trade, you can add more contracts, okay? Or if it's a forex, more lots, okay? Just one caveat, if you're trading forex, your broker needs volume data. If your broker doesn't have volume data, you can't use the VWAP predator. or the manager. Okay, very, very important. Now, with this, say you're in at this point here, what I want to do is if you get another buy signal on the VWAP Predator, there's opportunity to add. Why? Because the momentum's building. Yeah. You've got a buy signal down here, you've took it, it's pulled down, relax, you understand the behavior, you start to push, then you get a massive buy signal. So you don't do a market order, just above that high, you add stop market order, goes in. You get another buy signal at this point there. So what can you do? Above that one, you can add a third contract. Now, remember, with margin, you're only allowed to have so many contracts open depending on your account balance. For trading full contract silver, you would need about $30,000, $40,000 to be on the safe to do 3 contracts. Okay, so it's not. But this is just an example. If it was micro gold or something like that, you would have more opportunities to add more contracts to that. So just be aware. And I did put an article today or yesterday somewhere. Where is it? Bear with me. Okay. What was it last week? I put it in it was basically a risk management, margin, leverage, all that sort of stuff. Some calculations in there, and all that sort of stuff. Yeah, so that's probably worth having a read as well. But again, if you are adding contracts, you need to be quite a sophisticated trader, because the more you add, the more risk you get. In reality, if we just measure on here, 200, 200. So I need a 131 there. So in reality, that's our average holding position for all 3 in white there. Okay. So you've got one contract there, you've added a second there, you've added a third there. So now our average holding position, where we would be risk-free for those 3 contracts, is at that price there. But obviously now, when you reach that doji, you are 365 times 3. Okay, you're over 1,000 ticks, if you like, because you've got 3 contracts. So the power of the VWAP Predator is there. You just need the margin, the account balance, to be able to trade it effectively. Now, you could still do that with micros. Okay, you need probably something like $7,000 for any of the micros if you're going to go up to 10 contracts, for example. So if this was micro gold, for example, you could have 1 contract, 2 contracts, 3 contracts, 4 contracts, depending on, or 2, 2, and 2. But the VWAP Predator is pure momentum. Once that momentum starts, adding more contracts, there is always risk involved in that. But if you've got the margin, there's also huge rewards, because adding those contracts as the move progresses is very profitable. Doesn't happen all the time. Okay, if we go back in time now, we can see here, for example. I mean, there was a decent trade here. We added another contract here, for example, another one there, 3 contracts. Average holding position was 5, so average holding position was around there. Went into the close, 114 times 3, 350 ticks. Yeah, so you're not always going to get a massive move, but actually feathering in more contracts as momentum's building is a very, very strong sort of strategy. Sometimes we just go sideways, okay? But the numbers do play out. Here, for example, into the US Open, we have a really nice move all the way up to the close. It happens a lot. Shorts, exactly the same overnight. Those were great shorts. there are opportunities to add to those sort of contracts. What time? We got 10 minutes left. Okay. Okay. Right. Does anybody want me to look at a specific type, whether it's a forex pair, a futures contract, anything like that? We'll bang some on. We might stay with VWAP Predator. We might go with something else. Just put it in the chat there, and we'll have a look for the next 10 minutes and see if we can find a groove on something for it. Come on, first to put it in. That's what we look at. Don't make it too spurious though. CAD Chef. Wow. Okay. Do these have volume? Yes, they do. Okay. Okay. Ooh, we're a bit scrappy on the 10. I'm just going to put roller coaster on there. I want to find a bit of a groove as well. Not bad, but I think that needs to be 12, maybe. Maybe even higher. I think that's better. Oh. So Hale, 21-minute CAD Chef is definitely in the groove. Look at these moves. Wow. Okay. Why do I know it's in the groove? Because roller coaster is a signal, an entry, a stop, and this is the trailing stop. Okay. Here, winner, winner. As soon as when I see trailing stops, I see winners. Let's take the manager off for a minute. Let's just make it very bare. 21-minute Heiken on CAD Chef is in the groove. Not many losers. If I just keep seeing these trailing stops printed, I mean, this is awful, this particular move. But that is, yeah, 21 minutes is really in the groove. So how can we, again, I'm going to combine two indicators here. I'm going to put the roller coaster on, which is on the 21 minutes. I'm just also now going to put my VWAP Predator on. But what I'm going to do with the VWAP Predator is I'm just going to take the bands off. Just going to clean it up a little bit and just look for the signal candles. Okay. I'm going to just, okay. Right. So when we talk about confluence, I mean, CAD Chef is just phenomenal on the 21 minute. And I can see there's opportunities here, both long and short, to add early on in the move. So I'm going to take this long example here. Okay. Now, we have a buy signal at this point alongside the green. You see it here. There's a green arrow here. That's the signal for the roller coaster. There's also a buy signal on the VWAP Predator that's giving me, there's a lot of momentum, but I'm not going to go long. It's got to break the start line, but also my bias depth heat map has to be 5 out of 6, which is here. So I get an entry when this candle closes here on 5 out of 6. Okay, so I can go through that start line. That's my entry there. Okay. 1, 2, 3 candles later, I get another buy signal. Okay. That's, for me, that's the time to add more to my position. Okay. So my average holding position now is around about there. Okay, let's just change that to yellow. Remember our stop initially is at this point. Once we start printing the trading stop on the roller coaster, that's when we start to there. So our average holding position at this point on this candle here, let's put a vertical line in, is now risk-free. There, okay? What happens then is we get a nice, after this little relax, we get a nice big signal candle here. Now, if that's too far away from you and it, it increases that average holding position above the stop again, you've got risk, don't take it, okay? For me, I like them to come early on and quick. If that happens, it's a little bit too late for me. Just keep following that trailing stop all the way till it takes it out of that point there. I mean, that's a nice move. That move is approximately 19 hours, but it's a really great move. Okay. Same with the previous short. So here we can see we get a sell signal for the roller coaster. All 6 time frames are red. we can go along with our first here. We get a sell signal at this point here. And then we get another one right after. So I would, this is three entries for me. So our average holding position actually is probably this one. So let's just change that to yellow. And then we'll just draw in our initial stop. Again, once we start printing, coming through, now with our average holding position, we are now risk-free. These come too late in the move for me. And then just keep adjusting every time the candle closes, every 21 minutes, all the way till you get to that point here. Now, was there an opportunity to take more profit? Let's put the manager on. Okay. All these coming down is good. We've found support with lower than average volume. We start to come up now with a green candle with higher than average volume. You want to be ultra aggressive, get out at that point there, more profit. If you're unsure, you get a red doji here with a higher than average volume, again, which has got more volume than the previous candle, which has got more volume than the previous candle. That's the time to get out there. So adding the manager at that point, excuse me, it is the managers are very valuable tools for consistency with profits. It basically will increase your profits consistency if you follow the rules, and that's the main thing here, is following the rules. Okay, so CAD Chef, I mean, that's a good one. It's not normal. We got in there, it didn't take me long to find the groove. 21-minute Heikinashi roller coaster, adding the VWAP Predator, and then adding the manager to increase that that profit, as it were. Okay, even when it comes to something like this here, we can see rejection of these highs and higher than average volume, and then we get red candles coming down. We could actually get out and make more profit on that long just there as well. So yeah, I mean, it doesn't matter what instrument it is, it doesn't take long to find the groove. The roller coaster is fantastic for that. At this moment in time, 21-minute Heikinashi, CAD Chef, combining the roller coaster and the VWAP Predator and the manager gives you a fantastic opportunity on that particular currency pair. We got 2 minutes left, so I'm not going to go into any more. But as soon as I saw CAD Chef, I haven't looked at that for 20 years. So I thought that was, that was a good example of combining, looking for confluence. Remember, confluence is about using non-correlated indicators together. So the roller coaster has nothing to do with the VWAP Predator. Okay, absolutely nothing. The logic, the strategy is totally different. But when they align, boy, you've seen those things really, really move. Okay. Um, so hopefully that helps. Any questions on that? I mean, CAD Chef might actually go on my watch list. That's pretty good. Market's pretty flat at the moment, actually. Are we waiting for anything? We've got some data today, haven't we? What time is it US now? 59. So we've gone through some data, which actually made no real difference. We've got data in 15 minutes, which is industrial production. Not, I don't think it's going to really move. Got PMI later at 9:45 a.m., which could move, and then at 10 o'clock ISM services PMI. So that 10 o'clock is the big data, guys. That's could be the catalyst for the day that gets things moving. At the moment, I don't think any traders want to actually put the money where the mouth is until that data comes out, and that's what you get a lot of the time. That's why we're flat. So any questions before I go? This has been recorded, so I'll get the recording up as soon as I can. Good session today, something different. Cheers, Otis. For those that got the app, big updates last night, the beta testers. Android is ready if you go and update it on the link you've got. iOS, we're just waiting for the Apple Store to do the reviews. Thank you, Joe. It'll come in an email. If you're iOS, the email hasn't gone out yet, Phil, purely because we are waiting on the Apple Store to do the review. With Android, it happens really quickly. So we made some major updates to do with push notifications and quite a few other back end stuff. But you'll get an email when that comes out. Android is ready already. It's really quick. Okay, guys, enjoy the rest of your training day, and I'll hopefully see you all next week. Cheers, Raj.